As we established in the previous class, that internal control is one, if not the most cardinal wall of intervention that helps prevent fraud. We said the intervention mechanisms that separates the pre-fraud from the post-fraud, internal control sits at the top of such intervention mechanisms. So what is internal control? Internal control is a process for assuring achievement of an organization's objectives in operational effectiveness and efficiency, reliable financial reporting, and compliance with law, regulations, and policies. So everything an internal control measure is out to achieve is to ensure that an organization achieves its objectives. Without sound internal control measure, it might be difficult for an organization to achieve its objectives. So from the definition above, you can see that internal control is all-encompassing in running an organization, from its operations to finance to the legal framework to regulations guiding the existence and affairs of the organization's policy. So if proper internal control or proper control is within an organization, the organization stands the chance, more chance of achieving its goals and objectives. It goes to say that no organization can survive without proper control measures. That is, unless proper control measures are put in place, it will be difficult for an organization to survive or achieve its goals at all. The term internal is obvious that is saying that this is not an external factor. This is internally instituted. This is an internal affair, that is, as it works for that organization. So what works for organization A might not work for organization B, because there are basic differences, fundamental differences between organization A and organization B, even though they might be operating in the same industry. Such internal control measures could be in form of reviews, checks, balances, methods, procedure, or any combination of these. It could be like we are trying to balance powers. There is a check. We are trying to put check into people's power and operations and duties. Then reviews, Department A reviews the work of Department B. Then there could be, it could be in form of procedures, that these are laid down templates that we follow. All these things are not just to create unnecessary bottlenecks. They are to ensure that there is a systemic structure in the organization. And at the end of this, such systemic structure is just to achieve effective and efficient business conduct, to ensure that resources are optimally allocated, and such resources, such organization resources, are safeguarded as well. It's also to ensure that there is reduction and detections of error, fraud, and thefts. So we just mentioned fraud for the first time in all what internal control is out to achieve. So it's not just about fraud alone. You can see sometimes it's not just about fraud, but there's too many wastage in a production plant. For instance, internal control can help to checkmate that. Then it's how to ensure accuracy in accounting data. You can see from the definition, we said one of the objectives of internal control under the definition is reliable financial reporting. So one of the other things is ensuring adherence to policy, adherence to the organization's policy. So what is an organization's policy? And how does internal control relates to the organization's policy? An organization's policy are written statements that are put into consideration and perspective when considering, that is, these are written statements. They are put into consideration and perspective. They put into consideration and perspective the mission and the values of the organization for clear communication of plans, instruction, intent, and process. These are written. They are all written. They are formal statements, written statements of consideration, putting into consideration and putting into perspective the mission of the organization. What is this organization all about? What is our values? The statements put it, they are, mind you, they are written statements. They are not just verbal statements. Statement of our policy must be written, that this is what we stand for. This is where we're going. This is what we stand for. This is our values. They are clearly communicated that if you enter or if you are employed in organization A today, you can stand up and the policy paper of the organization could be handed to you and you'll be able to digest it. That from it will communicate to you the mission, the value of the organization and the mission, and it will communicate to you clearly the plans of the organization. It is from this that you will begin to see instructions that, okay, this is how we do things here. You don't do this, you don't do that. Instructions, clear instructions that aligns to the intent and process. Because at the end of the day, such instructions are to support the intent, our desire as an organization, and the process to achieving our goal. So from this, you can just say a policy or an organization policy are written statements of instructions, clear instructions that aligns with the goals, with the achievements of the goals of the organization. I'm trying to beat it down. Clear instructions. So when you see policy, you are seeing policy section so of the policy is communicating your instructions, fundamental instructions that aligns with the intent, the goals of the organization, and the process that we take to getting or to achieving those goals. So now, where does internal control comes in policy, in organizational policy? Now, we've seen that organizational policy is a written statement of such instructions. You resume by 8, you close by 5, you do this, you do that. But if there are no measures internal that controls it, that controls the affairs of the organization internally, if the atmosphere of the organization is not controlled internally, the policies will be as useless as any other ordinary paper. For instance, Mr. A works in organization XYZ, and it is written down in the policy of the organization that staffs are meant to resume by 8 a.m. But Mr. A just walks in anytime because it's a big organization. Nobody knows when you enter or when you leave. And his direct superior that is meant to even like query him for coming late, that he works direct, they are best of par. At the close of work, they hang out at the same joint. So that one doesn't even have any, that doesn't even, just condone him and all that. So who will suffer for all these lapses and all this inadherence to the policy? It is the organization. It is not Mr. A. It is not Mr. A's boss. It is the organization. So if, now take for instance, Mr. A now wakes up tomorrow and finds a staff register by the gate where he must sign his entry and his exit. What do you think? It will bring about one consciousness that now things are no longer the same. They are watching me. What if the MD requests for this cash register, or the human resources, if they have any, request for this staff register tomorrow, and they audit the staff register, knowing to know when who enters and when who leaves? What will happen? But if it's even a big organization, staff register might not be of effective use, or in this case. So an organization of such big size might be talking about using reader cards. When you have the card records your entry and your exit. So if Mr. A wakes up tomorrow and finds his organization installing card readers, what do you think will come to his senses? It will want to play by the rule. It will suddenly remember the policy says 8 o'clock, because something is controlling the affairs. Something is now driving the policy into compliance. So the essence of internal control is to ensure compliance to lay down organizational policies. Though the policies are written, they are in black and white, but something must enforce compliance. So that is the essence of internal control. So again, an organization can even take it ahead of that and say, okay, card reader, what about we install CCTV camera at the gate, within the organization, in the offices, so we don't only know the entry and the exit time, we also know the redundancy rate. By the time the CC camera picks you on your decks that you are just joking, you are just gisting, disturbing people around all through the day, you know it's an appraisal issue. Or you are just walking, wandering around. It's in some big organization, the pace movement of staffs are measured, the rate of pace. That is, every time they are seeing you standing up, where are you going? You are meant to be at your desk working, or you are just gisting around, or you are just engaging in activities that are not. It can even control theft in a place where cash or stocks are on display. So what are we saying? Internal control measure puts checks and balances, brings about review and method and procedures that allows the organization to achieve its goals. So the end product or the major goal of internal control at the end of the day is to ensure compliance that results to the achievement of the organization's objectives. So in the next class, we'll be talking about the types or the kinds of internal control, the types of and the kinds of internal control. Sometimes anyway, you should remember or you should take note, there could be what's called goals overlap between the benefits of internal control and other goals and objectives of the organization. Taking for instance, an organization has its as part of its internal control. You know, when we were talking about internal control, we said it even does one of what it was to internal control achieves is compliance with laws, with regulations. When we say laws, we are not talking about bylaws within the organization or regulation within the organization. It could be industry regulation, it could be federal government or state laws, or jurisdictional law or regional laws, maybe tax law, for example. Internal control is meant to ensure the company complies with the filing of tax returns so that they don't pay unnecessary penalty. But you cannot imagine a situation where the organization even benefits more by the time they circumvent some of the tax laws. Maybe the penalty they will pay if they don't file on time will make the gain they will make from reducing their tax if they play around their books or do this or do that. We even that gain, that excess, will even make up for the penalty they are paying on late returns of tax. So you can see that as much as they want to play by the books, as long as they want to comply, the profit maximization objective of the company is also overlapping. For instance, again, an organization that operates in an industry where you have to put some extraordinary safety precautions. You have to install so many safety precautions in your operational plans according to the industrial standard. But if you don't, it's stated in the same regulation that maybe you pay a particular fine per month. And by the time they saw the cost of procuring the equipment in question and the penalty they were meant to pay, they saw that the penalty is actually cheaper. It happens even in the banking industry that the penalty for flouting a law is cheaper. They just keep paying that penalty than trying to adhere with the law. So they are trying to maximize profit or reduce costs, and that goal of either cost reduction or cost effectiveness or profit maximization is overlapping with the internal control measures goal. So in such a case, the organization could be in the middle and they will always go for the one that is more beneficial. So there could be goal overlaps that hinders or underplays the importance of internal control or the applications of internal control, as the case may be in an organization.